U.S. gas average fee tops $5 consistent with gallon in historic first. The rate of U.S. gasoline averaged greater than $5 a gallon for the primary time on Saturday, statistics from the AAA confirmed, extending a surge in gas fees that is driving rising inflation. The countrywide average price for regular unleaded gasoline rose to $5.004 a gallon on June 11 from $4.986 a day earlier, AAA records showed. High gasoline costs are a headache for President Joe Biden and congressional Democrats as they war to maintain their slim manipulative Congress with midterm elections coming up in November. Biden has pulled on severe levers to try and decrease expenses, such as a report launch of barrels from U.S. strategic reserves, waivers on regulations for producing summer season gasoline, and leaning on major OPEC international locations to enhance output. Yet gasoline fees were surging around the sector due to an aggregate of rebounding demand, sanctions on oil producer Russia after its invasion of Ukraine, and a squeeze on refining capability. Demand destructions. Street travel, however, has remained quite robust, simply a couple of percentage factors beneath pre-pandemic ranges, while expenses have risen. Still, economists count on demand can also begin to decline if fees remain above $5 a barrel for a sustained duration. The $5 stage is wherein we could see very heavy quantities of gas demand destruction, stated Reed Lonson, senior economist at Kepler. Adjusting for inflation, the U.S. fuel common is still about 8% under June 2008 highs around $5.41 a gallon, consistent with U.S. Energy Department figures. Consumer spending has so far remained resilient in spite of inflation jogging at its maximum level in more than a long time, with family stability sheets shored up by means of pandemic alleviation applications and a tight activity marketplace that has fueled robust wage profits, particularly for lower-income workers. Gasoline products supplied, a proxy for call for, turned into 9.2 million barrels consistent with day closing week, in step with the U.S. Energy Information Administration, widely in keeping with 5-year seasonal averages. The excessive expenses for drivers come as major oil and gas agencies post bumper earnings. Shell, LON, RDSA, suggested a document quarter in May, and Chevron Corp, NYSE, CVX, and BP, NYSE, BP, have published their quality numbers in a decade. Other majors, together with ExxonMobil, NYSE, XOM, and Total Energies, in addition to U.S. independent shale operators, mentioned robust figures that have spurred percentage repurchases and dividend investments. Numerous companies have said they will avoid a moderate funding to boost output because of traders' desires to preserve the road on spending, rather than reply to $100 plus barrel fees that have continued for months. Refiners have been struggling to rebuild inventories which have dwindled, especially on the U.S. East Coast, reflecting exports to Europe in which buyers are weaning themselves off of Russian oil. Currently, refiners are using approximately 94% in their capacity, but typical U.S. refining potential has fallen, with at the least 5 oil processing plant life shutting throughout the pandemic. That has left America structurally brief of refining ability for the primary time in decades, analysts stated.